Hey folks, good afternoon and welcome to XM Live Education. This is the Advanced Room. Uh, Forex Pulse, name of the session with Mr. Stanislav Kolev, and I will be also with Marcin Novogorsky for the next 1 hour. Expecting a lot of comments, questions, setups, ideas, and everything. The original aim is the Forex Trading Pulse. And Marcin, I see your camera is making you a little pink or orange. I don't know.
If that's what camera wants to do.
I don't know.
That
You
that
got no power there, huh?
that's a very expensive camera. It should know better, you know. Hello,
I think you should talk to Gil about the camera.
certainly.
He
Um,
has a very good one. Like, you know what feature it has? He moves left and right and the camera follows him. I mean, that's
all
if you
right, all
go
right.
back, it zooms you in. If you go too close, it zooms you out, type of stuff. So it's pretty cool, pretty cool.
Very nice. I mean, if I only had a studio, um, for creation of media, I would probably have even better camera. I'm seeing Jack
I was
is.
about to make a silly mistake, but I'll keep it for me. So, very bad one.
And hello, Jack. Jack is with us in the chat. Hello, hello. Thank you for joining. Guys, feel free to join with questions, thoughts, ideas, experiences you want to share, and we will be happy to discuss. I thought you like pink colors, Dan.
I like it pink, yeah.
Okay. The market is not very pink, though. Um,
No, it's
it's a little
okay.
bit red, even.
We we have. I think you're more red than the market, though. Even though you're pink. No, I'm joking. Uh, let's talk about it. Yeah. Let's start from the elephant in the room. Fed last night. What's your take?
Um, Fed did the like I wanted to say hawkish cut. It wasn't hawkish cut. It was like neutral cut. Okay, it was like okay, we give you the cut, but we are happy with where we are after the cut, right? So didn't signal really like rush in cutting further. So
How
the
did you determine that? By the dot plot, by the press conference, or everything
by
in the whole?
Powell's remarks, yes, yes. So
Wow. It seems like it's me the only person that have have seen that event super dovish and Powell super dovish on it.
really.
Oh man, it's a super dovish event to me.
Is that does that have something to do with your theory about jobs data that is about to get really
No, it's
bad
nothing
and
to it was purely on the event. So we had the report being released at 9 o'clock. Your time has to be 8, if I'm not mistaken, right?
yeah,
And you got the dot plot, not very, um, not very sexy looking. But we are getting in 12 days from QT to QE. Tomorrow, there's going to be 40 billion expanding on the balance sheet of Fed, which is only 12 days after finishing the QT. So that's a very short period of time to happen. Only 12 days distance. And Powell remarks was, I mean, he said that there is from here the only room is either pause or cut a lot. He also said that inflation will cool off. I mean, I think that we were rather, at least to me, being having a very dovish event, and what have distorted things afterwards um, was the bad report that uh, we anticipated after. So
I'm seeing Nandom Ladong is with us in the YouTube, right? Hello. Thank you for joining. Thank you for the comment. Good afternoon. What's gold telling us now? Our great experts. That that kind of
thanks a lot for
built
tuning in, and
expectation.
since we only have like 15 minutes to talk about it,
Yeah.
goat is telling us that no matter the dovishness that we're having in the last few weeks, goat is not moving up. The demand is already getting a little bit suppressed. This is what I see. So for me, the next move will be down. Do I have a signal to trade it right now? Rather not. I really want to have maybe this low getting taken or have the US session in place. Oh yeah, the US session definitely before executing any positions there. Um, but this is the next wave that I would like to anticipate on gold before any further um, yeah configurations. So to me, I look to sell. I don't have a position at the moment.
Oh, gold is ranging and it's not supposed to be ranging, right? So something something is not right about gold. Jack is saying I thought it was dovish also. So yeah, we're gonna have to move back um to Fed also thinking about gold. Now the funny thing is gold is um, not doing well even when dollar is being dovish, right? Market doesn't like the dollar for some time already. Um, I I agree that some remarks Powell had are kind of dovish, but gold it's not boosting gold anymore. This is I think this is telling something about gold. Now, two things. One is that gold went up in last several years, like really significantly. Okay, so it almost feels like what's that 20 in 2022 when Fed was raising interest rates, right? We've been below 2000. All right, so it's like gold is not essentially right now attached to monetary supply. So when we are having gold dovish, sorry, Fed dovish, and U.S. money supply about to expand perhaps faster at a faster pace from now, um, it doesn't mean that gold has to go up because it already gone up. Situation that gold is, you know, sluggish at best, and even when the dollar is weak, it feels like market is not only moving away from the dollar right now, maybe the market is also moving away from gold. So take profit, get out, and get out from the dollar, right? Because like if you sell gold contracts denominated in dollars, you get dollars in exchange. So that's why usually gold and dollars are correlated inversely, right? So but at this in the situation when market is getting out from both of those assets, it's like in Japan, market is getting out of Japanese bonds, and so yields are going up of those
But
bonds,
it's
but
rather
also
same
they
in the
are going out
USA.
of yen, so yen is
But it's the
going
same in the
down.
USA. It's getting out of dollar and getting out of
Yeah,
bonds, US bonds as well. So
yeah. That's really concerning.
a lot of people are, if I could jump in for a second,
Mhm.
a lot of people do believe that when we have weak dollar, gold must be going up, which is wrong.
Hmm.
It is completely wrong. We have, and I was showing example last week with historical back test where we have a lot environment, and recently we had one where we had gold going up with super strong US dollar simultaneously running, and we have the vice versa thing, gold going down with weak dollar simultaneously running. So one doesn't exclude the other.
So nothing is a must on the market. Many things make sense unless they don't, right? Unless market wants it otherwise. So one idea is that the market, for example, interest rates were going down in the United States, right? And treasuries also have been going down, so yields have been going up. So what you have market expecting interest rates to go down, which would naturally should drag bond yields down and therefore push prices higher. And actually, the opposite happened, right? And there is good explanation for that. Just market wanted to unload more of the treasuries. I'm not sure how big scale of this abandoning is, but it's definitely not that U.S. Treasuries, for example, are bullish on the idea that Fed gonna be cutting rates. Um, right. So actually, if you look since September, we are around highest level of yield since September, right? And so it's pretty interesting. And then market was selling bonds, was not necessarily so happy to go into gold. All right. Theoretically, again, bonds should be positively correlated with gold. So because of risk off, but we don't have risk off right now. Actually, market is preparing for war in Europe to be over. Um,
But Europe
and
is
and
preparing for a different thing, I suppose, because Europe is
uh,
just start building up on starting a war with this, the stimulus and expanding the defense. How about that?
well, this is look, I'm not an expert. I've been listening to an expert in that today morning, and he was like on this update from recent developments in regards to Europe and Ukraine. And he said that first of all, there is strategic shift in how US is approaching Europe, how US is approaching its allies, and there is much more of like um, this position of you are now on your own. So that's why Europe is preparing. They also uh, figured out that they shouldn't be relying in terms of their power, in terms of their um, defense capabilities on Americans so much, and so that's kind of mutual. Americans don't want to provide so much conventional security, and Europe understands that it cannot rely so much on about conventional security on US. But he also said that there gonna be war with Russia, but not this one. And the war that we are preparing for right now, it's not necessarily going to be the war that we will be fighting in the future. So what I read from that is that right now they're not things are going towards peace. He said Americans want this peace. He said the Russians, like Russians are more reserved right now about that than Americans, and so he sounded like, okay, if there will be any clash, any war, that's something for the future, not right now. So um and actually, if you are preparing yourself, you might avoid the type of war that you are prepared for, because it's much more difficult to make decision to attack an enemy that's prepared, or in a way that he is prepared to defend against. So In that sense, actually, preparing for war may help avoiding it. My idea is that we are heading towards peace and we are heading towards risk on. That's why gold is not doing great and may start doing worse in near future, especially when big money need